All right. What is up, traders? What's up, tycoons? Super excited for today's video. Gonna have to give you guys another update on Palantir. This thing just keeps raging, okay? It has gone over 70% from its recent lows to its highs, and it just hasn't stopped moving really since its earnings, right? We see after earnings, it gapped up. All right. We actually hit our first two bullish price targets here, and there is potential we could hit our third bullish price target. But there's a couple warning signs, okay? And you may not want to FOMO in right now, currently, okay? We'll go over those conditions, break down the chart. We're also going to go over what's really been driving the price up, okay? And there's been definitely a gamma squeeze happening in Palantir. So I'll break that down for you guys, going over the option open interest, okay? And I even asked ChatGPT to explain a gamma squeeze to you guys. If you're not familiar with the gamma squeeze, we are going to break that down for you guys pretty simply. It's definitely something you want to pay attention to. I actually dropped a video about a week or two ago about the gamma squeeze potential in Palantir, and we definitely got one. We'll also go over today's sponsor and be using them to dive into the fundamentals of Palantir, okay? So not only some technical analysis, but we'll actually briefly dive into the fundamentals, okay? And as I mentioned, I dropped a video about the gamma squeeze potential in Palantir. We did have two trades that ended up going over 100% on Palantir in the Discord. So we've been doing a really good job on Palantir. All right, make sure to smash that like button, subscribe to the channel if you guys are new. And of course, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors, and trading in stocks, bonds, commodities, and crypto involves a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer, and we'll go ahead and start the video off by going over the gamma squeeze, okay? So what I want to show you guys, okay, is this is from optioncharts.io. And what it does is it gives you a nice visualization and a graph, essentially, of the open interest, okay? So open interest is the amount, is a measure of the total number of outstanding option contracts that have not been yet settled or closed, right? And so we see here, at this May 26th expiration, there was a very large amount of call options, which is going to be the green section of the bars at the 9 strike, the 9.5 strike, and the $10 strike. So we're really looking for Palantir to hold $10 and above $10 before this May 26th expiration. All right. And that was going to cause potentially a gamma squeeze, right? And we'll dive into what a gamma squeeze is a little bit more in a second. But essentially, market makers would be forced to buy lots of shares at that $10 strike price, once the stock is holding that $10 level as a way to hedge themselves. Okay. We take a look at the May 19th expiration dates, and there was an extreme amount of calls here at the $8 strike price, right? So we have a closer expiration with the $8 strike price. That really helped push Palantir up after earnings and, give it its first gamma squeeze, okay? And then you take a look at the May 26th, there was that really, really high open interest at the $10 strike price. And once it held above that $10 level, and really about 1030 was the level that we were watching in the Discord, we saw another explosive move to the upside, right? Now, a gamma squeeze is a specific type of event in the stock market that can drive significant changes in a stock's price in a very short amount of time. It typically involves options trading, particularly call options. And here's how it works. Options are contracts that give the holder the right, but not the obligation, to buy or sell a security at a certain price before a certain date. A call option is a contract that gives the holder the right to buy a stock at a certain price, known as the strike price, right? So I went over that $8 strike price and that $10 strike price. Now, market makers who sell these options, they typically don't own the underlying stock at the time they sell the option. Instead, they hedge their position to avoid risk. As the price of the underlying stock moves closer to the strike price of the option, market makers need to buy more of the underlying stock to hedge their position. This is called delta hedging. The gamma of an option is a measure of the rate of change of its delta. The closer the stock price gets to the option strike price, the larger the option's gamma becomes, which in turn means the market maker has to buy even more of the underlying stock to hedge their position. This can create a feedback loop. As the stock price increases, market makers have to buy more stock, which can drive the stock price even higher. This cycle can lead to a rapid, significant increase in the stock's price, a gamma squeeze. Now, remember though, trading is based on the anticipation of a gamma squeeze can be highly speculative and risky, as the stock price can also rapidly decrease if the gamma squeeze ends or doesn't materialize as anticipated. So let's dive into the chart now, okay? And we can see here very clearly, right, that after earnings, okay, this is 838, this is 875, these two levels, right? And we needed to get above these levels, right? Above these levels, we are going to be bullish above, and we're looking to see if we are going to be able to break through our supply zone here. As you can see, the price clearly, ended up going up, right? Came back down. We flipped our bullish above level from resistance to support, and we exploded past our first two bullish price targets. Now, the main thing that I wanted to show you guys was, look, this was 838 and 875. So you can see we exploded up after earnings above that $8 strike price. And we just saw that there was an extreme amount of open interest expiring on May 19th at the $8 strike price. So it then squeezed the price up higher into the supply zone. But when we pulled back, we held above $9. So market makers essentially were forced to, hedge themselves and do that delta hedging and start buying the shares, right? And then they're buying the shares, and that ultimately started causing the price of the stock to go back up again. And we can see here that once we got above that $10 price range right here, okay, we had a very strong close on the daily. All right, we closed above that $10 strike price. Now all of those $10 strike prices that expire May 26 were in the money, and now market makers have to go back and delta hedge again. And we saw a huge, massive move up to the upside on Palantir yet again, and we were able to come above our bullish price target here of 1158. So it was really significant, really great to see in Palantir. Definitely love to see that. Now, if we take a look at where the chart is currently, okay, what's really significant to me, all right, is that we did jump up some more, okay, but we were able to hold above our 11.5 level right here, okay? And so we want to see if we can continue to do that thing where we're flipping old resistance into new support, right? This was our old resistance level here that we really needed to get above at 912, and we were able to break out past it, flip it to support, and push higher. We're going to see if we can flip 11.5 or 10.6 to support now, okay? And if we break through those, we'd look for this prior supply zone here to become a new demand zone, all right? Now, as I mentioned, you may not want to FOMO into things right now, and there's a couple reasons, okay? If you take a look at your RSI down here, this is the relative strength index. It's going to go over the relative strength of a stock at its given prices and show that to you. And this dotted line you see right here is the technical definition of overbought, all right? That's above 70. And so you can see that we did get overbought here in the past, and the stock price did pull back. But just because something is overbought does not mean it can't go higher, right? We clearly saw that it was overbought, all right? It had a small pullback, and then it exploded up higher afterwards. But, typically a general rule of thumb is you don't want to be buying something when it's overbought, okay? I just explained that something can go higher, but from a risk to reward standpoint, it is a little more risky. Now, we also do have two gaps down to fill that are highlighted on the chart here in these arrows, okay? So take a look right here, and then take a look right here as well. And what you'll see is that there are gaps in between these candlesticks, right? So if I take the top wick and bottom wick in between these two, and I take the top wick and the bottom wick in between these two, you can see that we do have these tiny small gaps down to fill. Now, historically, these gaps, they do tend to fill about 90% of the time. So the big question is when they're going to fill, not if they're going to fill, okay? So if we're in a bullish cycle right now, all right, you wouldn't expect the gaps down to fill, right? What we've been doing is something known as a gap and go, right? Where we're gapping up and then we're going higher, right? And that's what we've been experiencing in Palantir. But if this bullish cycle ends, there is a strong chance that these gaps down are going to potentially fill. So you want to be cautious of that. You want to be aware of that. That way you don't FOMO into something and then all of a sudden Palantir drops back down to $10 or potentially even down to this 825 level, right? You don't want to get caught, with your pants down at the beach, okay, once the water comes in. Once the tide comes in, okay? So let's actually dive into the fundamentals now using Simply Wall Street. That's today's sponsor. you guys can get a 14-day free trial and up to 40% off if you use the link in the description or the pinned comment down below and you join via that link. Again, you guys will get a 14-day free trial. And what I want you to do is test the platform out, okay? Look up Palantir, not just Palantir, because we'll dive into Palantir very briefly, but look up your favorite stocks, or maybe look up some of your top stocks on your watch list that you're wondering if you should be investing in right now. And Simply Wall Street is a great platform that's going to give you guys some fundamental analysis in a very easy to digest and, great manner, right? And what's really nice about it is that they give you some really good visuals. Okay, so let's hop into what Simply Wall Street has to say about Palantir, and we can take a look at some of the rewards and the risks. Okay, from a risk analysis standpoint, shareholders have been diluted in the past year. And share dilution is something that many investors do not typically like. But from a reward standpoint, the earnings are forecast to grow 43.39% per year, and earnings have grown 12.3% per year over the past 5 years. Now we'll dive into things a little bit more, and we take a look at the price volatility. Palantir is not significantly more volatile than the rest of US stocks over the past 3 months, typically moving up or down 10% a week. Now, it's not extremely more volatile, but if you take a look at the average market volatility, Palantir is above that right now. It's not at a super high level, okay? But it is pretty volatile in my opinion. When you consider up or down 10% a week, that's pretty volatile in my books, right? Now, its weekly volatility of 10% has been stable over the past year. So, you can expect it to move around 10% a week, whether that's to the upside or whether that's to the downside, right? So, volatility is something that you need to be aware of as an investor. And, they go ahead and give you some nice visualizations of that. If you take a look at the shareholder returns, okay, over the past 7 days, Palantir has rewarded 23.3% returns. And over the past year, Palantir has provided 44.9% returns. Okay. And that's beating the market right now. It exceeded the US software industry, which returned 16.9% over the year, and it exceeded the US market, which returned 5.1% over the year. So you can see that currently at the prices and performance that Palantir has, it has been outperforming the US market and the US software industry. Now, they recently reported earnings, all right? And, you can take a look at their earnings details, their EPS, gross margin, net profit margin, their debt to equity ratio is something that a lot of people like. If you take a look, they have no debt right now, okay? They have a 0% debt to equity ratio with $0 in debt. That's something that, investors and a lot of people bullish on Palantir, that's something that they like and they pay attention to. Now, they have a projected 43.4% earnings growth rate, 43.6% EPS growth rate. Their software earnings growth is at 20.2%. Revenue growth rate is at 18%. Their future return on equity, 10.7%. And this was last updated on May 12th, okay? That, some of this data right here, okay? Now, if you look at a valuation standpoint, after its huge rally, Simply Wall Street is suggesting that the stock could be potentially overvalued right now. And you can click on each of these individually, right? It's going to give you 6 tabs. If we take a look at the price to sales ratio versus its peers right here, it's going to give you a nice graph and show you Palantir is at a 12.5x, okay? So it is expensive based on its price to sales ratio compared to the peer average of 9.7x, right? And that would be 9.7 times, all right? Now, when you look at the price to sales ratio versus its fair ratio, the fair ratio is at 11.1 and Palantir is currently at 12.5. So it is expensive based on its price to sales ratio compared to the estimated fair price to sales ratio. And if you look at the price to sales ratio versus the industry average is 4.1 and Palantir again is at 12.5 right now. Okay, but the financial health looks really, really good. It gets nothing but green checks on the financial health standpoint. All right, and I mentioned that they have no debt right now. They have a really nice stable cash runway. So whilst unprofitable, Palantir has a sufficient cash runway for more than 3 years if it maintains its current positive free cash flow level. And Palantir is unprofitable but has sufficient cash runway for more than 3 years due to free cash flow being positive and growing by 70.2% per year. Now, when you take a look at the return on equity, the ROE, Palantir is at negative 8.9%. Meanwhile, the industry average is actually at about positive 10.3%. And if you look at the future growth, as a lot of people see Palantir as a growth stock, okay, the future criteria checks get 4 out of 6, right? It gets a check on the earnings versus savings rate, it's earnings versus market, high growth earnings, and the revenue versus market. But the two places that it gets an X on is the future ROE and the high growth revenue, right? And we can see their ROE right here. It is negative now at the moment. So that's it for today's video. Remember to use the link in the description or pinned comment below to dive deeper into your favorite stocks and really see, before you make an investment, maybe is a company overvalued right now at the moment? What does their financial health look like? It also goes into dividends and much, much more. It's a really great platform. Using that link will get you guys 2 weeks for free. And then if you go ahead and decide to make the purchase, you can get up to 40% off for the first 100 people to join. So thank you guys for watching. Smash that like button and subscribe to the channel if you guys are new, and I'm out.